$1,900 per ounce gold. Is that price level achievable? This is what we are going to discuss in this video. Before we proceed, disclaimer, this video is for educational purposes only and it is not a financial advice. Okay, so what we are looking at is the gold futures chart. This the platform using is TradingView, and this is the continuous futures contract plotted by TradingView, and we are on a monthly chart, so we are really looking at longer term picture. What we can see is that around 2016 we had the bull move in gold start, and what we have had is consecutive higher lows and higher highs. So that's the basic definition of an uptrend. And in August of 2020, we had a high reached, that was the all-time high reached in gold, and then we had a recovery high in March of 2022. So the August 2020 high was $2,089 per ounce, and the recovery high was 2078, so just shy of a few dollars. So zooming out at this longer term picture, what we are really interested in is looking at the price structure. So when we look at this, the August 2020 high and the March 2022 high, it's a double top form because that was a resistance level which the price was not able to take out, and it just moved back into the range. And also the 1690 level, it's very important level because that is the 38.2% Fibonacci retracement level from the lows back in fact December of 2015, when this bull move actually started. So what we have had is in March of 2021, so last year March 2021, we had a retracement which retraced the 38.2% level, and then found support. It went up, and then it found resistance around the 1912 region. It tested this 38.2% Fibonacci retracement one more time, formed a double bottom here, and we had a rally. The rally was unable to take the this high out of from August of 2020, and what I've seen is basically a retracement lower. And what is interesting to note is actually when price moved lower, this took out this 38.2% retracement level, and we had 1-2 months where price actually traded below this, and then last month we had a rally. So what we are not looking at the moment is actually the dollar chart, because the dollar has been extremely strong, and despite dollar being that strong, if we look at euro or the British pound, the gold price has actually held relatively much better. What we're looking at now is actually a retracement level around here of this entire move. So let me just draw it here, and price is hovering around the 38.2% retracement level. December usually tends to be a positive seasonal influence on the gold price, and we'll discuss in a little bit later on a daily chart the patterns which we are watching, and also what we have discussed in our previous videos, that 1900 ounce level is perhaps reachable based on the pattern formations and the support levels which we are watching at the price. It doesn't do not breach those levels. So just to do a quick comparison of this, what we have seen in the past, that's when in 2011, also in the month of August, and then there was a retest in September of 2011. That's when the gold price topped, and then we had a protracted decline in gold prices for several years. And this level here was the entire decline. Let me try drawing it like this. Easier to see this way. So that's from this level to this level was the entire decline. And the symmetry is really amazing because what the price did is it just retraced right this amount, which also happened to coincide and form a confluence level with 38.2% Fibonacci retracement level acted as support. Here we got a double bottom, and then price was able to take that down to the downside. Here we had just like what we had here, we had two touches, one touch, two touch, and then a rally. The rally kind of failed. Here we had one touch, two touch. It rallied, not able to take out the highs here. Went back into the range and finally took out the bottom. Here what we have seen is actually something kind of similar, but again, the dollar has been pretty strong. And then what we're looking at is that last month was a pretty bullish month, and it just this last month engulfed the last 2 months bearish price action. So perhaps there is strength, and 1900 gold level perhaps is possible. So what we're going to do now is go back to our daily time frame. This is the one which we had been discussing in our previous videos, and we had been kind of following the price action on a day-to-day basis, and we were looking at this wedge formation here, and we had a price level as resistance around here, which was the 1.272 expansion of this, 1.618 expansion of this. Also we had a structural resistance here, and it was also a wedge pattern formation. And what we were discussing was that price is likely to rotate lower right to this support trend line, which it did. And this also happened to coincide, I've not drawn it here, but that level was also the 38.2% Fibonacci retracement level of this swing. So this 1780 is a pretty important level, because that's where the price is finding support after finding resistance here. So first here, then this was, I believe, the CPI day. It found resistance at the 1.618 expansion. Next 2 days price went back into the range, tested this level, and then last Friday it was a small bullish candle, which is a little bit early sign that perhaps a reversal back up is possible. We'll have to see. So what we are watching for now is that there's one more possibility, that if this 1780 support level is breached, we have another support level of around 1762, and that's also the so the reason I'm saying that is because last time we had a pullback in this ABCD formation, which is the BC leg of this larger ABCD pattern, which we have been watching. The retracement came around to this much, and then if we take that and project it from here, it just goes right, also coincides with the 61.8% Fibonacci retracement level of this smaller AB leg, around here, pretty much that level. One thing is that if the price was to rotate down to around 1760 level, then this smaller ABC, the nested ABC cycle we were looking at, then that's get negated. So the chances of the price rotating lower to 1762 remains a possibility, but it appears that the 1780 would perhaps be a stronger support level. And also next week is the kind of the week where gold prices in terms of seasonality tend to be pretty strong, especially the couple of days before the holidays, and then moving into the new year. It's usually a pretty strong seasonal positive influence on gold. So keeping all those factors in, and given that these support levels which we have discussed, 1765, and especially this our structural support, which we are calling our point C here, is not taken out to the downside, this ABCD cycle seems to be in play, which could take the price up to about 1900. In fact, there is a zone of resistance formed from around 1880 to 1900 level, 1902 to be precise. That's where the 61.8% retracement is, and this is the 1.272 expansion level of this swing. Let me actually draw it like this, coming around here. And then we have this ABCD, the larger one from here, and then perhaps even a smaller nested ABCD, which also goes into the pretty much the same resistance zone. And as we had seen on the longer term monthly chart, this 61.8% retracement level could be a pretty strong resistance level. So this 1900 level or thereabouts, we also have some structural resistance coming from here, this zone, and also this one here. Well, let me actually try drawing a horizontal line. So around this one, change the colors, make it red, make it a solid line here. So there are a number of confluence levels coming together. There is structural resistance coming from here. We have the ABCD formation, perhaps even a nested ABCD, the 1.272 expansion. So a number of confluence items coming together, making this 1900 region, 1880 to 1900, as a possible strong resistance level. So the possibility remains that perhaps the gold could likely reach the 1900. Perhaps it might be even able to do it before the year 2022 winds down. But that's the level which we are watching, and at that level we'll have to assess how the price is going to trade around this level, because it appears to be a pretty strong resistance level. And we'll have to see how the price will trade around this and whether it's able to take it out, or whether it finds resistance and the price moves back into the range and rotates lower. So this is what we are watching in this weekend review. If you like our analysis and how we take a technical look at the assets, including precious metals, then please do subscribe to the channel and also hit that like button and bell icon button in particular. That way you'll know when the new videos are posted. So thank you very much for watching the video, and we'll be back soon. Thank you.